When you're starting out as a small business, most likely you have no idea how to manage the money. You see, managing money as an individual versus managing your money as a business is kind of a different ball game. When you manage your own money and personal finance badly, you are the only one who suffer. But if you manage the company's money badly, not only you yourself suffer, but your entire company employees and their livelihoods will be impacted. Therefore, effective financial management of money is really crucial and important for a brand new small company, just so that they are sustainable in the long run. And in today's video, let's discuss some ideas of how you can manage your money as a small business. First things first, you will need to create a budget. And a budget is essentially a financial forecast where you have to project your revenue and expenses for a fixed period during this time. It could be a year, a quarter. And at the same time, that's where you can calculate whether you are making a profit. And that is also where you are setting out your gross or your profit margin targets. For example, you are expected to earn $10,000 revenue within the next quarter and maybe $5,000 of business expenses. So your net profit will be $5,000, which is a 50% profit margin. This will be your forecast and your budget. So you may ask, why do we even need to set a budget when we don't even know what will happen? Because essentially, what gets tracked gets managed. Once you have a target or a forecast that you can work towards to, then you will see whether you are on track. And if you're not on track, then what can you do as a business owner to make certain decisions so that you can get back on track and stick with the budget? So having a clear sense of the financial situation of the company is especially important so that you know where you can put your money, whether you want to spend, whether you want to save, and all these are super important decisions that you will need a budget to help you track the progress. And one very important expense that is often overlooked is the projected taxes, because next year, if you have made a profit, you will need to pay corporate taxes to IRS, so make sure you set a budget for corporate taxes as well. Number 2 is tracking and monitoring your business expenses, because firstly, we talk about the budget, right? But the budget is just a forecast. It's a projected thing. You don't know until the actual spending comes in. And once the actual spend comes in, that's where you will need to track and monitor and even document with supporting invoices so that you can have a proper documentation that this is what your business have spent on, and you will need to categorize them accordingly to their specific budgets for different segments of the business. This is just like your personal finance budget, right? Like you allocate $500 for food and then $200 for grocery per month, and then maybe like $100 for transportation. If you found out that you overspend in a certain area, then you need to look at why did you even overspend, and is there a justifiable reason that you overspend? As a business owner, you have to answer that yourself, whether it's justifiable to spend so much on marketing expenses while you're not seeing results from these marketing expenses, from getting more leads, getting more new customers, and getting more business. So once you have found out that you have overspent in a certain category, maybe you need to relook at it, review it, why did you overspend, and find out ways where you can optimize the cost and even cut spending. This would include your manpower as well. If you're having too much headcount and too many employees are idling and not doing work, then that is a cost to the business as well. Ultimately, tracking and monitoring your expenses will help you monitor your financial health, whether it's in a good shape or a bad shape. But I know that many of you, when you're starting out a business, tracking and monitoring expenses will be the least of your priorities because it is so tedious, right? All these small $10 or even $100 receipts, you need to keep them, document them, and then track them. And it's such a hassle because you have much more important things, like you need to discuss with customers, you need to discuss on projects. You don't have time for all this. So I will bring a piece of good news to you, because you can now focus on driving your business to the next level while leaving your bookkeeping, your accounting, your taxes, your compliance matters all to Awesome. Awesome helps entrepreneurs like you grow businesses hassle-free with their expert accountants and easy-to-use software. No need for multiple business apps, because now a single Awesome platform can help you resolve all the issues. Just ask the 15,000 small business owners who are already with Awesome, like myself. And now you can use my referral link in the description below to get 16% off any Awesome services today. Next up, I want to talk about controlling your cost of goods sold. And this is fundamentally different from the previous example of business expense, because cost of goods sold is something that you cannot avoid. or minimize. You can only optimize. For example, you're manufacturing a product and you need raw materials. In this case, let's give an example like you're opening a bakery or cafe and you want to bake cakes. So your cost of flour, your cost of eggs, your cost of oil, all these are your cost of goods sold. And if you have been in the news since the last year when the Russian-Ukraine war broke out, you'll know that the cost of flour have been increasing exponentially. So you will need to regularly review your cost of goods on where you can optimize the cost. Are there any alternative suppliers who can provide the same level of quality with a cheaper cost? Or are you able to buy in bulk so that you can negotiate for better discounts on a large order instead of multiple small orders? Like I said, effective cost control is vital, especially for a new company, because costs are guaranteed, but your revenue and profits are definitely not guaranteed. So it's much more important to protect your downside first so that the upside of the business can take care of itself. And finally, the most important thing is cash flow management for new startups. I cannot stress how important it is to monitor your cash flow to make sure that you have enough cash to tide over the next month, the next quarter, just so that you have enough money to cover your expenses and also invest in the business growth. You have to make sure that you have enough cash to pay your suppliers on time so that there will not be any disruption risk to your business. If let's say you are unable to pay for your cost of goods like the flour or eggs, then how are you going to operate your bakery business? It's going to close, right? And that is just on the suppliers and bill side. How about on the customer side? Because not every customer will be good enough to pay you on time as well, even though you have stated the receivables dates. For myself, I will reduce collaboration with customers whereby they don't pay on time, their credit is always aging, and they are not prompt enough in their communications to communicate the matter. How about cash flows for your internal stakeholders? I would say that you have to keep at least 3 months the operating cost. That includes your salary, your rent included to run the business. Because like I said, even though your revenue is recognized when your goods or services is delivered to the customer, but they may take their time to pay, or in worst case, they may not even pay and become a bad debt. That's when you have a sale, but you do not have the cash. So it's really more important to keep some cash buffer just in case you're tight on the cash flow. And remember to budget for your corporate taxes, right? Set aside some cash for your corporate taxes due next year to IRAS. Very important. Now, while these 4 tips are really essential and crucial to any business starting out, but I would say that each industry will differ by its own, and these are some more of the general standards. Financial management for a business is definitely a more comprehensive process that needs to be regularly reviewed and monitored by the stakeholders, especially the business owners. Most importantly, stay adaptive. Whatever problems may come, make sure you discuss with the relevant stakeholders to seek a common alignment so that no parties will be offended by the decision. And this is how you can effectively manage your money as a small business. But if you are thinking of how to manage your money as an individual instead, then I'll show you how I personally manage my money and cut spending strategy right here in this previous video.